Hello, everyone. This is Alpha Omega. Today, as planned, I've prepared some content about OPENDOOR. If you could hit the like button before watching this video, I'd really appreciate it. So today, let's think about why OPENDOOR's stock price is dropping and take a look at what new strategies they announced this time. First, we'll take a look at the shareholder letter. So, the CEO says this. This is a pretty general statement, but he says, we aim to reinvent the US residential real estate industry. Our goal is to make it simpler, more convenient, and more customer-focused. So, we will continue to develop and improve the platform we've been working on so far. Well, that's about all we talked about. Next, he also mentions that uncertainty is increasing more and more. He also talks about tariffs. He says that the macroeconomic indicators and the exchange rate environment are currently very challenging. He goes on to say that the US real estate market is no exception, so it's also having a tough time. He also mentions that interest rates are rising, so right now, buyer demand is weak. In other words, the demand from people wanting to buy homes is decreasing. For OPENDOOR's sales to go up, home transactions need to be active, but that's just not happening. So they're saying that this kind of pressure is likely to continue for a while. And what they say is, we've widened our spread. They say, we've widened our spread, but what does that mean? Well, simply put, the spread refers to the price they bought at, right? The purchase price, the price they paid to acquire the home. And then there's the selling price, right? What they're saying is that they're going to increase the selling price even more. So basically, it means they want to buy the house as cheaply as possible and sell it for as much as possible. They want to make that gap even bigger. That's how you should understand it. Now, whether this strategy will actually work remains to be seen. Because here's the thing, what's the risk here? Well, if they try to buy the house for too low a price, people might just refuse to sell to them. Hey, I can't sell at that price. That's something people could definitely say. And then, secondly, they said they want to sell at an even higher price. Then, from the perspective of buyers, they might say, hey, that's way too expensive. We can't buy a house at that price. So, there are some side effects like that. So, I think they'll really need to manage and adjust this carefully. Now, what else is there? I haven't mentioned this yet, right? With interest rates staying around 7%, buyer demand is weakening and there also aren't many sellers. There just aren't many people looking to sell right now either. So, the contract closing rate has dropped by 25% compared to the same period last year. This contract closing rate is also called the clearance rate, and it really shows that there are just so few completed home transactions now. And also, the number of people who were planning to sell but then withdrew their listings has increased by more than 30%, according to the report. Just something to keep in mind. So now, the platform that we've been running and developing, they're saying that they're going to make the most active use possible of OPENDOOR's platform. And, this slide is really important. For our future growth, what are we going to do? We're also going to accept cash offers here. Now, with cash, you could buy very easily and quickly, just like that, fast and simple. You could also sell and resell. But now, we're talking about utilizing agents here. So, how should we interpret these agents? Well, currently, real estate agents share property listings through an electronic system called MLS Proof. And what we're saying is that we're going to list our properties there as well. So from now on, we're going to use agents as an important secondary element of our business. So, in practice, when agents show homes to clients, they'll let them know when you buy or sell a house. You can go the traditional route and list it on the MLS, but there's also a cash offer option. In other words, they're going to present this option to customers. And if they do present it and a deal goes through at that price, then the agents will receive a certain portion of the commission. So right now, people who are working as agents in the US can get support from OPENDOOR and, how should I put it, they could potentially increase their performance. OPENDOOR has said that they plan to introduce this kind of system, and they've also mentioned that they're currently running this pilot program in certain markets. So, whether this will work out well or not is still uncertain, but in any case, if we look at their increasing sales, we can at least confirm to some extent the validity of this business model. That's something you might want to keep in mind. Next, there are a few more good things. Why is that? Well, it's because home sellers can discuss the best sales strategies with these agents. They can decide whether to sell the traditional way, or if they're in a hurry, it might be better for them to get the money quickly and sell fast. So, they can come up with strategies like these. So from OPENDOOR's perspective, whether it's a cash offer or an MLS listing, they can increase those kinds of opportunities. In other words, they can raise the success rate of sales. And then, another thing is that in the past, homeowners used to record videos to sell their homes on the OPENDOOR platform. But instead of that, since these agents, who are in a more objective position, are often present at the house anyway, the agents themselves can record the videos. So, they can also handle the home condition assessment on behalf of the homeowner. This means that homes can be evaluated more quickly and accurately. And the best part is, when they say they're listing it on the MLS, what does that mean? It means that OPENDOOR is no longer going to buy homes themselves. Instead of purchasing homes and holding assets directly, they're saying they want to move toward an asset-light model that generates profit without owning the properties themselves. So, right now, they actually have inventory, homes, worth over $1 billion. They're holding on to this inventory, but it could easily turn into toxic assets. That's because they bought these homes at high prices in the past, and now they might not be able to sell them. So those kinds of properties will remain as really bad inventory, and what they're saying is that they want to reduce this kind of risk. So, when OPENDOOR talks about asset light, what they mean is that, in the end, they're connecting these customers to real estate agents. So, the agents either offer cash to the customer or list the property on the MLS, and if a deal goes through, they pay a brokerage fee. That's what asset light means. The core of this model is that OPENDOOR no longer buys homes themselves, but instead facilitates the transaction. So, right now, interest rates are rising. And because market volatility is also increasing, directly purchasing homes has become very risky. That's why what is it called? Asset light. They're now trying to use the asset light model, so it would be good to keep that in mind. So through this, they can somewhat reduce the risks they've been carrying, like inventory and so on. If they can efficiently get rid of this inventory and generate a lot of revenue here, OPENDOOR looks pretty good. But I think we'll have to wait and see how this plays out. So, in any case, we can sum it up by saying that they're trying to reduce the capital costs and potential losses associated with holding inventory. And in the presentation, they also mentioned that they're going to do 3 things to increase profitability. So they're saying they're going to be very strict, really strict, about pricing, about how they set home prices. And then they mentioned that they aggressively widened the spread. What does that mean? Basically, it means they're saying they're going to buy homes at lower prices. So, ultimately, this is a measure to protect our company's profit margin. Because if we try to buy homes at lower prices like this, the number of purchases we make might decrease. But at this point in time, they believe it's the right decision. That's how you should understand it. Next, what did we say about the conversion rate? Earlier, we called it the transaction success rate. To increase this, they are updating their pricing model, the software model they have. So, for example, if a house comes up for sale in a certain neighborhood, how are the schools in that area? How's the local competition? They're trying to use these kinds of factors as variables to set prices more accurately. You can just keep that in mind. Next, when it comes to targeted marketing, they're saying they'll now take seasonal effects into account. So, because they can expect housing prices to rise in the first and fourth quarters, they plan to set the spread lower during those times, and for Q2 and Q3, they'll use those periods to sell the homes they've purchased. In other words, they announced here that they'll be reflecting seasonal changes a bit more in their strategy. And now, regarding advertising expenses, they said their goal is to maximize efficiency and effectiveness. For example, they mentioned placing their ads in highly effective spots, like during major events such as the NFL draft in April. That's basically what you need to understand. So, this quarter, their revenue came in at $1.15 billion. It's a pretty large amount of revenue, but if you look closer, it's actually a net loss. They recorded a loss of $85 million. And this quarter, they sold 2,900 homes. They purchased about 3,600 homes. Currently, they have an inventory of 7,080 homes. And the value of this inventory is $2.36 billion. That's what they said. So, in order for OpenDoor to turn its net loss into net income, they'll need to sell this inventory quickly and at a really good price. Just keep that in mind. 2. Now, they've provided some guidance. First, they've slightly raised their revenue guidance to between $1.45 and $1.52 billion. Next, their contribution profit guidance has also been raised a bit compared to last quarter. Raising this contribution profit means they're lowering the cost of goods sold, so basically, they're planning to cut costs. They're basically saying they're going to cut costs. As for pre-tax operating profit, they're saying it'll be between $10 and $20 million, which you can understand as them aiming to reduce their losses from minus $10 million to minus $20 million. Now, here they're explaining things like contribution profit and EBITDA, so if you need this information, it might be helpful to take a screenshot. Also, what they said this time is that they've significantly lowered the number of homes they're planning to purchase in the second quarter to 1,700. Why did they lower the number of purchases? As mentioned earlier, they said they would take a very conservative approach and widen the spread. If that's the case, people probably won't be selling their homes as much. Right? So, we can understand that the expected number of purchases is 1,700. As a result of that, the risk here is that the fewer houses they buy, the fewer opportunities. They'll have to sell those houses in the second half of the year. And having fewer opportunities means that their sales could decrease. So, in any case, this could put pressure on their sales in the second half of the year. But given the high level of uncertainty right now, their strategy is to widen the spread as much as possible, which means they have no choice but to buy as cheaply as they can. There's really no other option from OpenDoor's perspective. So, for now, you can understand it as them coming up with this kind of strategy in a real estate market where sellers don't know how buyers will react. So, if you look further, there's something called the MLS clearance rate, which shows how many of the real estate listings used by agents are actually getting sold for 2025. That's represented by this pink color here. And for 2024, it's orange, green, and blue, but you can see that the success rate is much lower now compared to the past. This shows just how little real estate is actually being traded right now. Next, this is about the current 30-year mortgage rate from Bankrate, and it shows that the rate is still very high. 2020 is much higher than 2021. When interest rates are high, people get scared and don't want to borrow money. That's why people aren't buying homes right now. Just keep that in mind. Next up is this. Unemployment rate is likely to be criticized. It's the unemployment rate. The unemployment rate has been gradually rising from 2013 and is projected to keep increasing through 2025. In the end, if the unemployment rate goes up and we can't make money, if we can't make money, how can we buy a house? Will the bank lend you money? Of course not. Those things become impossible, or at least very difficult. So, when the unemployment rate rises, it inevitably has a negative impact on real estate transactions. So, it would be good to keep in mind that these index numbers are going up, like this. Next, the PMI was released, and this time it came out at 48.7%. This is the manufacturing index, and generally, if it's below 50, it indicates an economic contraction. Right now, it's fallen below 50. To explain what this means, they asked purchasing managers at companies, is your company placing a lot of orders? Are you producing a lot? How's your hiring going? What about your inventory levels? How is the supplier delivery speed? They conduct surveys on these kinds of things. By looking at how the purchasing managers respond to these questions, you can get a sense of how the company is doing right now. This is how they assess the state of the manufacturing sector in the US, and currently, it's below 50%. So, the manufacturing sector isn't doing very well. So in the end, what this means is that the US economy, especially the manufacturing sector, is really struggling right now. To put it simply, the economy isn't doing well. That's how you should understand it. So, a lot of indicators are currently pointing to the fact that real estate transactions aren't likely to happen. That's why things are a bit uncertain for OpenDoor as well. So, after OpenDoor announced its earnings, the stock dropped by about 5%, but then in after-hours trading, it actually went up by 8.9%. Surprisingly, I honestly don't know why it went up. But if I had to guess, The reason people might have found to push OpenDoor's stock up after seeing their earnings data is probably related to what I mentioned earlier about them being asset light. I think their strategy to lighten up their capital, basically to become more asset light, might have been seen as a positive signal. And then, what else did they mention as part of their strategy? Earlier, they said they plan to widen their spread a bit. Maybe investors viewed that strategy in a positive light as well. That's just my personal take on it. So, I think we can wrap up the summary of OpenDoor here. If you have any additional comments, please leave them in the comments section. And if you have any questions, I'd appreciate it if you could leave those in the comments as well. Also, please don't forget to hit the like button. That's it for today's video, and I'll be back after preparing for the next company.
Thank you.